What's up, everyone? It's Scotty with Money Investing. So we've got a big week on our hands. It's going to be a retail week. So we got retail sales, GDP numbers, I believe, are also coming out. We've got the FOMC minutes, and not to mention lots of earnings like Target, Walmart, and of course, we've got Home Depot as well. So I've already done videos on Home Depot and Target and Walmart, and we'll be doing more videos on other companies. So let me know in the comment section down below if there's any stocks, any companies you'd like me to analyze prior to their earnings being released. I will make sure to do them as soon as possible. Again, comment down below if there's any stocks reporting earnings next week that I haven't already covered. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month. And I also posted a members only private video on 4 trade ideas that I do see value in over the coming weeks that you can also take advantage of. So everything is going to be covered from entries, exits, profit targets, risk and reward, the support resistance. Everything is covered in that video. So link's going to be down below if you want to access all of our private members only videos and of course be a part of our money investing community. So this right here is going to be the earnings calendar. So we do have on Monday, Suncor Energy is reporting after the bell. And that's pretty much it. We've got Beam, Monday, we've got Hut 8, Green Power. Those are some of the companies, but not anything that I'm particularly interested in. Tuesday, we've got Home Depot pre-bell. Already done a video on this. Sea Limited, I haven't talked about, but that's a company that I might actually end up doing a video as well because we have talked about it in the past. Again, it's not a profitable company. It's not a profitable business yet, but eventually when it does become profitable, I do expect a lot of potential for that company as well. PaySafe is going to be reporting a pre-market on Tuesday as well. Then we got NU reporting after the bell. We've got H&R Block. We got Kava is reporting recent IPO for Mexican food, very similar to Chipotle. They're going to be reporting, and that's pretty much it. And then on Wednesday, we've got Target, Zim Integrated Shipping. I've already done video on Zim as well and on Target. We got JD.com, we got TJX, we got Tencent. So a lot of Chinese companies reporting numbers as well. And then after the bells close, after the markets close and the bell here on Wednesday, we got Cisco, Synopsys, we got Paycor, and that's pretty much it. I may do a video on Cisco as well. Walmart's reporting on Thursday pre-bell. We got Applied Materials after the bell. This is another company, AMAT, that I actually might end up doing video on. Farfetch, we've got a Billy, and then that is pretty much going to be it. And then finally, we got Friday, John Deere and XPeng reporting their numbers as well. This right here is going to be the economics calendar. We do have retail sales coming out bright and early on Tuesday, August 15th at 8:30 a.m. Eastern. That again is going to be very, very important because again, it gives us a little bit more insights into retail spending, sales overall, and Target and Walmart and Home Depot are also going to be telling us a little bit more about the strength of the U.S. economy and, of course, the consumer and how well are we spending our money. Wednesday, August 16th, we got MBA mortgage applications, industrial production, housing starts and permits, and, of course, the FOMC minutes come out at 2 p.m. Eastern as well. And then leading indicators on August 17, jobless claims, of course, that come out every Thursday, Philadelphia Fed Manufacturing Index. And then, of course, finally, we've got the quarterly services survey, Baker Hughes, rig count. GDP numbers are not scheduled for next week, apparently, so I was mistaken. I thought the GDP numbers were coming out, but apparently they're not. I could be still, I don't know why Econ Day is not showing up. I remember seeing something that GDP numbers were scheduled for this upcoming week, but maybe not. Maybe it's the following week. So I'll confirm that. I will let you guys know in the Discord. But the main key items here are going to be the earnings, which are going to be a lot of retailers, a lot of large retailers, right? Walmart, most revenue for the company ever. Like in other words, like that's the only company that generates the most revenue, right? And then of course Target and Home Depot, and not to mention some of the other chip manufacturers like Applied Materials is reporting, and then we'll take a look at that company as well, and XPeng and Zim Integrated Shipping. So some of those interesting companies we will take a look at. Now going over to the S&P 500, so this right here is going to be SPX. We've already talked about the technicals. I've done a full detailed analysis video on S&P 500, of course, the NASDAQ, the technicals, and what levels that I don't expect the markets to breach down to. But we've got a very strong support at 4440. In fact, there was a report on MarketWatch going over market technicals, and their levels were almost identical exactly to what my levels also are, right? Something that I've already mentioned before in my other video is 4440. This right here, very, very important level. If you do see a breakdown below this, which again is not unlikely if this dip actually turns into a somewhat of a reasonable sort of correction. Next support is going to be 43.30. So this right here inside this green rectangle is going to be that next very, very important support level right here at 43.30. And the lowest that I could see the S&P come down to during this sell-off is down to this right here, that intersection between that higher low and that horizontal supports in roughly at 4,200 down to maybe at the very least 4,100. So those right there are going to be some levels to watch. And that's about as low as I could see the S&P come down to before the buyers step in. Heck, even I would be stepping in if the S&P drops here down to 4,100. That would be about a 9% correction from its recent highs. I would be very much interested in taking advantage of a lot of deals out there, dollar cost averaging, and of course, swing trading back to the upside as well at those levels. Talking about the NASDAQ, it's the same thing. We have already started to break down below that support, and the next most important support is going to be sitting right over here, 13,200, that intersection between this higher low that the NASDAQ's been following since December of last year, and of course, this horizontal support right here, sitting roughly at 13,200. So those right there are going to be very important support levels, of course, in case we break down below this level for the NASDAQ, which again is possible because right now we would only be down about 8 to 9% reasonable correction from those levels. In case we see a breakdown for the NASDAQ, the next support is going to be 12,280 in line with that 200 simple moving average, and of course this previous resistance potentially acting as a new support for the NASDAQ as well. We've already talked about the percentage of stocks trading above or below their moving averages, and right now we are coming off of those levels. So again, if you go back to some of these charts right here, you'll notice that we got up to as much as 93%, right? 83, 82%. Majority of stocks were trading above their 20-day moving average. And every time we've gotten up to that level, we've seen a bit of a pullback. So this is nothing out of the ordinary, right? I just want to make sure that you guys know that this pullback that we've seen over the last couple of weeks is not surprising. It's not shocking. It's not something that, caught us off guard, but instead it is very, very normal. It is just another one of those healthy pullbacks that we see every time the market gets a little bit more stretched to the upside, and it's just one of those cycles, right? This right here, 63%. This is percentage of stocks trading above their 200-day moving average. Last time we were at these levels, we were back in February. We did see a pretty reasonable pullback, 46%. Again, came down to 35% here. Percentage of stocks trading above their 200-day SMA, and this time around, again, we got up to as much as 63. And in the last couple of weeks, we've seen a bit of a pullback. So nothing to be scared of. This is very, very normal. And the moment S&P and the NASDAQ come down to trade at those levels, we will be ready to kind of deploy some dry powder and of course take advantage of those deals once again, and not only dollar cost average for our long-term positions, but also be looking at swing trading back to the upside, whether it's levered ETFs, whether it's ETFs in general, or whether it's individual stocks. We'll be ready to trade them back higher from a swing trading perspective, and of course be selling puts so we can take advantage of that reversal back higher as well. So hope you guys enjoyed this video. And again, a big week coming up. We got retail week, and retail stocks are reporting earnings with retail sales also coming out. Very important technical levels to watch with a lot of individual stocks trading at support. So the moment they break down, there might be more potential downside for the market, but I do believe the buyers are going to step in at some point during this dip and this sell-off. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.